Now jumping over to XRP in the charts. Now, as we talked about, our long-term momentum wave did break back to bullish right here back on July 1st. Let's zoom in here a little bit so you can get a look. And this would be right here, turn from red to green on July 1st, July 2nd. And obviously we did have a lot of resistance here for several days actually until it finally broke out on July 8th. So another week that it just sat there doing nothing, consolidating sideways off of one of our spider lines. And if you're new here, the spider lines are trend lines that are drawn from the drop of 2018 on the weekly charts with a pivot point or fulcrum point right here in the middle of April 2021 when we got that high. And then it draws a point into the future, which becomes our new support and resistance, which has been historically very spot on. In fact, if we take a look back, that most recent drop down to $1.90, it literally bounced off of one of our spider lines there. Let's zoom out to the weekly chart so you can see this a little better and easier. So here's our $1.90 spider line that comes to us from January 15th. Right now, you can see we ran into the spider line that was the $2.25 level, and that was the spider line that came to us from January 22nd. Now we're on the January 29th line.
Nick here. Quick heads up for all you smart investors watching this. If you love to see your crypto actually working for you, earning passive income every single day on your coins, we're putting together something really cool. On July 20th, we're running our first ever free online event challenge. It's called the Crypto Passive Cash Flow Challenge. And it's basically 3 days where you'll learn our DeFi strategies we use to safely earn passive yield on our coins 24/7, even while we sleep. And some people are doing crazy numbers with this strategy alone. And if you had some coins that you're just holding on to, you should join us and discover how to put them to work. We've never done anything like this publicly before, and we probably won't ever do it again. So it's completely free, but we might have to limit spots to keep the quality high and give everyone proper attention with the size of our YouTube channel, over 360,000 subscribers now. So if you want in, just click the link below this video, grab your spot while you can. And now back to the video.
Which we broke through just a couple of days ago, the $2.55 level. And then we go up to the green line, which is our February 5th, 2018 line, which is acting as a support. And then our most recent resistance line is actually the February 19th, the week of February 19th's spider line. So as you can see right now, that is where we rejected off of today. We do have the brand new candle that just opened up an hour ago. So it looks like we got a new candle starting here. Remember, we have a great support now here at $2.88. We do have a resistance we need to break through at $3. Then we can surge up to $3.09. Then we can get up to $3.21. And then we have some big moves that are waiting to happen, which burst us back to $3.50 and then all the way up into the $3.85 range. So on the daily, we are full on bullish on the long-term momentum. Our short-term momentum waves have reached the 100 level and have been there now for several days. And what is really exciting, when you take a look back at the moon phases indicator, you can see we had a moon phase indicator flash for a full moon, and we have been pumping ever since. Now that full moon going into the new moon takes 2 weeks, so we can see a continuation to the upside here. Now the moon phases is not the most accurate. However, historically, it does do a pretty good job showing there's going to be a pump coming right after. As you can see, this full moon got that secondary pump to $3.40. We go down here and we can see this full moon was our official launch into November. But then we had that crazy consolidation phase where the full moons, new moons didn't really do much. I mean, it's interesting to say it didn't do much nowadays, right? Because when it went from $2.60 to $1.90, it was a 70-cent move, while we were sitting there at 55 cents for 4 years. So that is a significant move, don't get me wrong, but just one of the indicators I like to pull up every once in a while. Now, the one thing that I have been talking about, we do have some pretty large fair value gaps to the downside. What I would like to see, this is what I am hoping to see. We have to see a reset on the green-red short-term momentum line coming down and then pulling back up. We want to see the white line remain to the upside, a pull down of the red green line, and then a move back up. So as we saw right here, they both moved to the upside, and then we had a pullback on the red green line, and then the shot to the upside. Now, we did have a little bit of a retraction on our white line here, but it did come and rally back to the upside. And along with that, I would not mind to see a consolidation period remaining above this $2.88 line, then making the move to the upside. However, when I switch to the weekly charts, we are looking like we have smooth sailing continuation to the upside. You can see our short-term momentum and midterm momentum has started its move to the upside. They have not peaked at the 100 level, and there is still room to move to the upside. We are still super early in this second weekly candle. There's still 6 days left in this weekly candle to the upside. Now, like I said, on the daily, there's quite a few fair value gaps to the downside. The weekly fair value gap gets us pulling all the way back to $2.32. Eventually, that could happen. But right now, with this momentum, depending on how these votes go in Congress, do we pass these 3 votes? If they do pass, I see this price soaring up to new highs without a doubt. Now, when we go back to our traditional supply and demand or support and resistance lines, you can see the most important level that we need to break is right here for now on the weekly charts. This candle push right here left us a candle body, as you can see right here, candle body close, and then a drop from there. We did not break through this level yet on this weekly candle either. We need to break through there. That would create another new higher high. So as you guys remember, we were talking about this level right here was so important to break, because when this tried to break it, it didn't make it and it failed back to the downside. But as you can see, last week's candle officially broke through this level and this level, creating a new market structure. We are in bullish market structure. However, we did not break through this level on the weekly candles. And then we do also have one weekly candle body close above that level, which is right here, that we also need to break above. So once we break and close above $2.93, will get us a new higher high from here, but $3.02 gets us a new higher high from here. And once we break and close above this $3.02 level, that'll be the highest ever weekly candle close for XRP. So keep an eye out for that. Very bullish ahead. We have lots of room in the weekly. There is a possibility on the daily of a small consolidation, as we talked about, and that small consolidation would probably be right here at about the $2.88 level. There is also this very important trend line that we were talking about. Price already broke through there, came back and retested it. Could we get a double test off of the zone? And the only reason why I point that out is a possibility is because we can see right here on our daily, the 10 exponential moving average is all the way down here, likely come back and bounce off there. If we look at the 12-hour, the 10 exponential moving average is right here. If we look at the 4-hour, we're bouncing off the 10 exponential moving average right now. So important right here. If we can hold this on the 4-hour, that would be fantastic. If not, there's a possibility of just sitting here consolidating. But as you can see on the 4-hour, our short-term and middle-term momentum waves are coming back for a reset. I personally do not believe that we're done. This was not the top or anything like that. But when you blow off so hard to the upside, sometimes you do need to have a little small pullback and then send it back to the moon. Now, when we jump down to some really micro time frames like this, here's the 2-minute time frame. As you can see, price has come down, tapped off the 2-minute 1100 exponential moving average here. We talk about that a lot on this channel. It actually spiked under, back to that support line, bounced. And as you can see right now, we're losing the 2-minute 1100 exponential moving average, which is currently sitting at $2.90. So then we may come down to the 3-minute, which is $2.87. Let's go ahead and mark these off as well as potential levels. And then we have the 4-minute, which will be here at $2.83. And we'll even go to the 5-minute. And these levels are definitely potential levels of support. We don't want to see them breaking below these levels at all. So 287, 283, and 279 is where I would start to wonder what the heck just happened if we break below those levels. Let's go ahead and take a look at what Bitcoin has going on. So something we talked about with Bitcoin is that there was a very nice bull flag pattern that had been printed. And if it plays out, so if we take this here and we go from the bottom of that candle to the top of this level, creating the flagpole, this being the actual flag or pennant, whatever you want to call it, it's just a flag pattern. And then you put it at the breakout level, that gets us a potential price target for Bitcoin of $146,000. And then when we do Ethereum, it has the same exact scenario on the weekly. We have a bull flag pattern. Now, this one was a little bit different because it created this bull flag. It had a liquidity grab up and then a liquidity grab down, and then it came and settled back in and finally broke out. But this breakout level does get you, once we move to the top of its range, is going to be in between the supply and demand zone to the upside as well, 3,800 to 4,100.